Hi guys, welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. Well, over the next 40 minutes, we'll be talking about all the cues for trade, all the big earnings that we are going to digest in today's session. Yesterday was a good start to the week. We'll have to see whether or not we build on those gains, given the fact that the index heavyweight Reliance Industries has beaten expectations when it comes to the profit growth, and Jio also handed in a very strong show. Of course, HCL Tech also reported numbers post-market hours. We'll be digesting that as well. And global cues, of course, looking extremely strong this morning. So lots to digest, and of course all your stock related queries will also be in focus. If you have any queries, keep them coming in on our live feed on YouTube. We'll try and get them addressed. But before we move any further, let's take a look at the top headlines at this hour. Wall Street's record run continues. The Dow and S&P 500 hit new highs driven by tech stocks, with AI darling Nvidia hitting fresh lifetime high. Asian markets open largely higher, while the GIFT Nifty is suggesting a mildly positive start for the Indian market. Crude prices fall over 2%, with Brent back around the $75 mark as OPEC cuts its 2024 demand estimates for the third time in a row. Meanwhile, gold prices edge lower on a stronger US dollar, in fact, which has hit a 9-week high. And Reliance Industries beats estimates on robust growth in digital services and upstream business, which offsets a weak contribution from O2C business. Jio delivers strong numbers as average revenue per user jumps, while retail sees some softening in demand in the fashion and beauty vertical. Meanwhile, HCL Tech's second quarter numbers beat estimates in a strong quarter. The company also raises the lower end of its FY25 revenue guidance. And Hyundai Motor India's 28,000 crore rupee public issue, India's largest to date, opens for subscription today. The issue closes on the 17th of October and the stock is likely to list on the 22nd of October. The company has also raised over 8,300 crore rupees from 225 anchor investors ahead of the IPO opening. Well then, let's take a look at all the cues for trade this morning. The markets, of course, kick-started the week on a solid note. In fact, the markets are at a one-week high led by index heavyweights. Of course, Reliance Industries, that could provide a much-needed fillip towards that 25,200 to 25,300 mark. For the Nifty, of course, 25,100, that's where we are at right now. HDFC Bank, L&T, ITC, these were among some of the contributors to Nifty's gains yesterday. Nifty Bank as well saw very good traction. In fact, the index managed to end above key moving averages, the 50 and 100 DMAs. Realty and IT were some of the other gainers on Monday. In fact, looking at the auto pack, two-wheelers also, saw some buying on expectations of healthy festive demand. Although till now, there hasn't been any fireworks, so to say. But of course, we know that festive season will continue into January till Lohri, right? So, we'll have to see how really this festive season plays out for auto majors. In terms of options cues, for the put call ratio, it jumped to 0.99 vis-a-vis 0.84 in the previous session. Talking about stocks in the F&O ban list, India Energy Exchange, Nalco, Tata Chemicals, these are some of the new entrants in the F&O ban list. Stocks that continue to be in the F&O ban are the likes of Chambal Fertilizers, GNFC, Granules India, Hindustan Copper, IDFC First Bank, Punjab National Bank, Manappuram Finance, RBL Bank, as well as SAIL. Foreign investors continue to, sell stocks in the cash market. The sell figure stands at somewhere around 3,700 crore rupees. Domestic investors, once again emerging as net buyers of stocks worth 2,200 crores in the cash market. So these are all in all the cues for trade as we head into the market open. 10 minutes to go for the markets to open, but let me quickly bring on board then our technical guest for today. Joining me is Nirav Chheda of Nirmal Bank. Nirav, great to have you on the show. We started the week on a very strong note, 25,100. We managed to reclaim that on and that too decisively. But today, do you expect Reliance Industries to provide that much needed leg up, and we could perhaps make a dash at that 25,200 to 25,300 mark?
Yes, hi Nandita. Thanks for having me on the show. Frankly speaking, Reliance, I don't think it will be a game changer for today. Probably it should remain flat, but yes, there are signs of a reversal. I believe 2680 is a very strong support area. If that is supported for today and not broken, then you will see the stock move up again up to that 3000 3200 odd levels from where it had come down. So it has come down towards its support area, and I do believe in the coming days definitely this will support the Nifty and take Nifty higher. But for today, there are other stocks which I believe can take the Nifty higher. Nifty is slated to move up because the PCR for Nifty is quite low. The cost of carry has come down from 185 200 odd to sub 90 odd levels, which is a positive. Also at 25,000 strike, you see the PCR is much above one. Even when Nifty had gone below the 25,000 levels, the PCR continued to be above one. That was a show of strength. And you're seeing good amount of put built up in the last few sessions at the 25, 200, 300 strike puts. So that does tell us that some amount of buying should come in. And I'm bullish on Nifty. One can look to buy Nifty at current levels. Whatever Reliance does today, I don't think it will matter much for the Nifty in terms of the closing. So yeah, 25 550 and 25 600 is where I'm looking at Nifty to come in the next couple of days. So one can look to buy at current levels, and on some declines, your support level for Nifty on the futures is around the 25,080 levels, 25080. So that should be a stop loss on the futures, and you can go long.
Okay, you can go long. That's the call on Nifty. 25,500 to 25,600 on the upside cannot be ruled out in the coming sessions. But Nirav, talking about the Nifty Bank Index, saw good traction yesterday, very close to that 52,000 mark. Do you think that could or that level could be tested today on the higher side? And particularly for HDFC Bank, there's a note from Jefferies. It has a buy call and target price has been kept at 1890 rupees per share. Given the fact that the share price for HDFC Bank is around that 1700 levels, would you expect higher levels sooner?
Oh, definitely. This is one of the stocks which I've been tracking for so long, which haven't moved up much. And finally, you see HDFC Bank, giving a big breakout. And post this breakout, a retest has happened. Uh, Very good pattern for this stock. And in fact, for today, this was one of my recommendations as well. I believe this stock can move up to 1780, 1800 levels in probably the next 2 3 days. Looking at the overall pattern, so yeah, definitely I am a buyer here. For HDFC Bank today, you can buy with a stop loss of around 1650. 1770 would be the first target. For Bank Nifty, a higher top, higher bottom formation is in place, and I believe a lot of shorts were built into the system, which are getting covered. And whenever such things happen, you see huge movement coming in on the positive direction. So yeah, I'm expecting 50 to 500 to come in for Bank Nifty today itself. So yeah, you can go ahead and buy this index as well. Uh, the stop loss on the spot would be around
Right.
51,500. On the futures, the stop loss would be around 51,700.
All right, 51,500 for Nifty Bank and 51,700 on Nifty Bank futures. Hope you've taken note of those levels that Nirav just mentioned. But before I talk about more stocks, let me just take our viewers through how Reliance really has fared in the second quarter. Of course, the company has topped estimates when it comes to profit growth on the back of strong telecom and retail growth. Profit is up somewhere around 9.4% at 16,560 crore rupees. On a quarter-on-quarter basis, it has managed to beat expectations. Revenues from operations are at 2.35 lakh crore rupees vis-a-vis 2.36 lakh crore rupees on a quarter-on-quarter basis. As I mentioned, robust growth coming in, on Jio. Of course, there was a tariff hike in the quarter, because of which the ARPU growth has been above estimates. ARPUs have come in excess of 195 rupees, and that has topped estimates. In fact, retail as well. Some bit of slowdown in beauty vertical, but the growth has been fairly strong in terms of footfalls. as well. If you talk about the tariff hike, the company has said that the full impact of the tariff hike is likely in the next 2-3 quarters. The O2C business revenue grew 5.1%. Oil and gas business reported record quarterly EBITDA. Retail business profit jumped somewhere around 1.3% on a year-on-year basis, and retail business revenue was down by 1% or thereabouts. The EBITDA for retail business was somewhere around, gained, in fact, was up around 1%, but margin expansion, it saw margin expansion of somewhere around 30 basis points or thereabouts. Number of stores at the end of the second quarter or the September quarter stood at 18,946, which is up 1.6% on a YY basis. Taking you through some of the commentary that has come in from Chairman Mukesh Ambani, he said that the company or the group has demonstrated resilience of a diversified business portfolio. In fact, the performance reflects robust growth in digital services as well as upstream business. He also mentioned that the O2C business was impacted by unfavorable global demand supply dynamics, but he mentioned about the growth in digital services, which was led by an increase in ARPU, again, which was a result of a hike in telecom tariffs, and that too after nearly 3 years. Improving customer engagement metrics also aided digital revenue. In fact, home broadband segment is something which has been witnessing accelerated momentum. The company will be focusing on strengthening its retail operations, and that will help scale up the broadband business as well. He also mentioned that the first new energy gigafactories the factories are on track to begin production of solar PV modules by the year end, and the new energy business is poised to become a significant contributor to the global clean energy transition. Just quickly looking at what the brokerages really have to say, Morgan Stanley has retained its overweight call on the stock. Target price is at 3,325 rupees. Morgan Stanley has taken note of the profit beat by Reliance Industries, and they've also pointed out that there are cyclical challenges in retail, but that should unwind in 2025, and the same goes for the refining business as well. And aside of that, if you look at Nomura, it has a buy call, target price at 3,450 rupees. It says that the longer term outlook remains constructive, underpinned by consumer facing businesses of the group, and commencement of the new energy operations by March 2025 will be a key trigger for the stock going forward. So all in all, Reliance Industries profit beats estimates. Jio, of course, very strong performance coming in from there, and in terms of retail business EBITDA, even that has seen an expansion. But 9:13 on the clock, 2 minutes to go for the markets to open. Nirav, in terms of stock recommendations, you were mentioning that HDFC Bank is one of them. What are your other recommendations for viewers?
Yep. See, HDFC Bank, really like. Second, I'll give two more. In fact, I like Granules India. Even though this is in ban, you got to buy it in cash. I believe a very good reversal is in place. The stock can go up towards that 675, 700 levels in the coming time. But from a near-term perspective, you can look to buy the stock at current level with a stop loss of 595. 645 should be a first target. Then there is another stock which I really like, and that is Capacite Infra. That's from the mid cap space. The volume profile for this stock and the overall pattern is superb. This is a slow mover, but I like it. So look to buy the stock at current level with a stop loss of around 375. 420 is your target.
All right, those are the recommendations coming in from Nirav. But of course, we are getting the first ticks, and it is a positive start. In fact, 25,200 on your screens, almost an 80-point uptick on the Nifty. Even the Sensex is above that 82,200 mark. I beg your pardon. Almost a 300-point jump coming in on the Sensex. The mid-cap index moving in tandem with the global, moving in tandem with the benchmark indices rather. 0.3% uptick there, and the Nifty Bank Index also very close to that 52,000 mark. So it's a strong start, but I want to take note of the individual movers first before I move on to what sectors are doing. Some of the auto and banking names are doing well today. So you have the likes of, very quickly, just want to see which are the top gainers. Of course, BPCL. That's one stock that's gaining today on the back of a cool off in crude prices. Crude, of course, Brent crude is back around that $75 per barrel mark, and a fillip for OMC is clearly. So BPCL is the top Nifty gainer. Aside of that, crude derivatives like paints are also gaining. Asian Paints, that's the next big gainer on the index. M&M, that's another one that's gaining traction. Bharti Airtel, Shriram Finance, some of the tech names like Infosys, Tech Mahindra doing well. HCL Tech, of course, reacting to its numbers, 0.5% higher for this particular stock. And in terms of banking names, you have ICICI Bank that is doing well. Trent continues its up move. That stock is also among the top Nifty gainers, and so is Bajaj Finance. In fact, Bajaj Twins also doing well. Aside of that, what's not doing well is ONGC. That's down 1% or thereabouts. Reliance Industries also, some bit of weakness there, despite a profit beat in the second quarter. Hindalco, JSW Steel, Tata Steel, all the metal names are under pressure. Of course, we had stimulus announcement coming in from China over the weekend, but there was no particular dollar figure or the size of the stimulus that was announced, and which is what came in as a disappointment. And we saw metals reacting in trade yesterday as well, and today as well, they are extending losses. In terms of sectors then, just want to quickly see what the sectoral moves are like this morning. You have auto, 0.5% uptick coming in there. That's the top sectoral mover as we speak. Banks are doing well. IT, 0.5% gains coming in there. Pharma, PSU banks, all of them in the green. But what's not doing well is the metal basket. As I mentioned, metal stocks extending losses from yesterday. Energy pack as well, down by 0.2% or thereabouts. Looking at the open, we've seen HCL Tech and IT pack doing well today as well. TCS, HCL Tech, these two numbers are out. What would you do with these stocks now, Nirav?
Sorry, I didn't get that. Can you repeat it, please?
TCS and HCL Tech on the charts, post numbers, how would you be trading into these counters?
Yeah. So basically, see, TCS at this point of time, the overall pattern isn't really good, not the one where I'd like to buy. But HCL Tech is where, I want to be in. HCL Tech has witnessed a flag kind of a formation breakout, and it is making a higher top, higher bottom formation in the longer term charts, which is quite favorable. I believe this stock can move up towards that 1950 odd levels quite soon. So you can buy the stock at current levels with a stop loss of 1840 with that target of 1950. But for TCS, I would not be a buyer at current levels. I'd probably wait till this stock either moves up above 4250 odd levels or comes down toward that 4050 odd levels. It's in between, and the overall pattern is negative. So I'd be waiting in TCS at this point.
Okay, that's the view. Won't be a buyer in TCS at the current juncture, but we have some brokerage views on HCL Tech. Just quickly want to take our viewers through it. Jefferies has a hold call. Target price is at 1770, and they've said that Q2 operating performance has managed to beat estimates with both services and products businesses surprising positively. Of course, the company has raised the lower end of its guidance from 3% to 3.5%. The stock is, of course, tad bit expensive according to brokerages, given the fact that IT stocks have seen a good run since the first quarter numbers. So Jefferies has pointed out that with stock trading at 28 times 1 year forward, they see limited scope for re-rating for HCL Tech in particular. Even HSBC has a hold rating. Target price has been raised to 1700 rupees per share. And they've noted the upgrade in the FY25 guidance. But they've also said that valuations are now in line with TCS, which further restricts near-term re-rating rather. But in terms of mid-cap IT, anything that you like, the likes of Persistent, Coforge, anything catching your fancy, given the fact that most of these companies will also be reporting numbers this week? Any trade ahead of numbers?
See, mid-cap IT has done very well. So there have been two halves where mid-cap IT has performed significantly better than the larger cap IT stocks. And some of the charts and some of the names that you mentioned, like, Persistent or Coforge, have done tremendously well. Coforge has just witnessed a breakout again, above the 6950 odd levels. I believe it is slated to move up towards that 7800 to 8000 level. So I definitely like this stock. I don't know how the results will be, but the chart is very positive. I don't see much downside coming in, even though if the results are weak. So one can look to buy the stock at current levels and on declines if you get them. 73.50 is a good support area on a closing basis. That should be your stop loss. There's another stock that I really like, and that is Zensar Technologies. It has been giving good results. The overall chart pattern has been tremendous. It is making a higher top, higher bottom formation, and just previously bounced off a good bottom formation that it made around that 670 odd levels. I believe this stock is slated to move up above that 800 odd levels. So that is one stock one should be looking to buy again from this space. 695 is a very good support now, and that becomes your stop loss. And your first target would be around 800.
Okay, that's the view on mid-cap IT overall, but I want to shift focus to a stock that is doing extremely well in trade as we speak. Angel One, good numbers, and the stock is reacting to that. Profit has jumped almost 40%, and revenues are up in excess of 44% on a YOY basis. Margins have also expanded to 44.4% vis-a-vis 42.3% on a YOY basis. Angel One, in the last 3 months, it has seen an over 30% jump. Stock has been in continued uptrend as well in the last 5 sessions, including today's move is coming to 12% or thereabouts. Do you see more upside? Do you see a fresh breakout after numbers? How are the charts poised now?
Yeah, so see, the whole industry is doing well, and this stock overall, this made a good bottom kind of a formation around that 2000 levels. Huge volumes have gone in at those from 2100 to 2200 odd levels. I believe this stock has broken out. It has broken out above an important channel kind of a formation, and this stock can move up now towards the 3500 level. So I believe one can look to buy this stock from a near term to medium term perspective, or the whole sector. Any stock in this sector, they're doing very well. The likes of JM, Idle, and others. So yeah, look to buy the stock at current levels with a stop loss of around 2750. 3500 is where I'm looking at for the stock in the next few days.
Okay, that's the view on Angel One. Let's shift focus to Sterling and Wilson Renewables. Then, the company reported its numbers. It has swung to a profit vis-a-vis a loss in the same quarter last year. Revenues are also up 36%, and it has received good order flows during the quarter. 820, in fact, not during the quarter, yesterday as well, it had received a fresh order of 820 crore rupees or thereabouts. Total order inflow stood at over 2,000 crore rupees in the second quarter of FY25, and all of these orders are domestic orders. And it has also achieved highest ever unexecuted order book of 10,500 crore rupees. The stock per se, has seen a reversal in the last 1 month. If you see, it has lost somewhere around 24% or 25%. Do you think a major part of the selling is done, and do you see some bit of a reversal on the charts, or do you think there is more to go before the stock can make a rebound decisively?
Yeah, unfortunately, it is one of the few stocks which has witnessed a breakdown and with volumes. It is looking negative on the charts, and at least from a near-term perspective, the stock can come down towards that 500, probably 450 odd levels. Only when, if it comes there, it will make a good base kind of a formation and then move up. But at this point of time, I would just say don't be in a hurry to buy this stock. It is slated to come down in a few days.
Okay, that's the view. Then on Sterling Wilson, not looking very pretty. That's the call. But let's talk about a CESC then. Its arm, one of its arm, Parva Green Power, has signed a special purpose, agreement to acquire Deshraj Solar Energy, and Deshraj Solar Energy will become a step down subsidiary post the buyout. Now, the stock, has cooled off. If you look at the last 1 month chart, CESC, but it did see a good run, over the last 6 months or thereabouts. It has rallied over 30% or thereabouts. And today we have a query as well that I spotted on our feed coming in on this particular stock. Alex wants to know your thoughts. And on this particular chart for the medium to long term, and how are the other power transmission stocks also poised on the charts? That's the query coming in from Alex, if you want to take it up.
Yeah. So, see, this is one sector which has done very well going forward, and this stock also, there's no stopping this stock at this point of time. It's making a higher bottom formation. No doubt, it has come down from 210, 12 odd levels to where it is right now, but it has taken good support around 180 odd. And I believe the reversal again is in place, and the longer term trend will take shape again. So yeah, look to buy the stock at current levels. 180 is where your stop loss should be. Again, at least 210, 215 is where I'm looking at for this stock from a near-term perspective. You can look to buy this stock. From the power transmission stocks, there are some of the stocks which have moved up quite a lot and probably taking a break at this point of time. So, CESC is the only stock at this point of time which I feel can probably do better in the near term than the others. There's one stock IEX, probably, once that downside is over, up to this stock can come down towards 175, but that once that is over, you will see a good buying coming in this stock again. But till then, if you want to buy right now, CESC is the only stock that you should be buying.
Okay, that's the view then. CESC looking good within the power space, but let's shift focus to the sugar space then. A query coming in from Shrivardhan Gupta, and he has a query on Balrampur Chini. He has 600 shares at the rate of 570 rupees per share, making a profit here, obviously. But if you look at some of these sugar stocks, they are extremely volatile and very reactive to news flow, right? Government related news flow, etc. The sugar stocks have seen a sweet run, if you look at the last 1 month charts, but off late, some of them have cooled off a bit. Do you see some bit of a fatigue after, a sizable up move on a 6 month and YTD basis? And with regards to his holdings, what should be the short term target?
Yeah, I don't see much fatigue at this point of time. Yes, some of the charts are stretched, but still, overall, the whole sector should continue to perform. A 2 year breakout has come in for Balrampur Chini, about at 530 odd levels, and it hasn't really moved up much post that. Only about 100 rupees, 120 rupees. I believe the stock, looking at the quantum of the breakout, the stock can move up towards that 725, 750 odd level. So you can continue to hold on. 620 is a very good support area right now for this stock, and that should be a trailing stop loss now. So once that is broken, only then you exit the counter. Until then, you can hold on with that target of 725, 750. Another stock in the same sector that I like is Bajaj Hindustan. Very good pattern, good volumes seen, and this is in consolidation. But near that support of this consolidation, so one can look to add this stock at current levels. You can buy with a stop loss of around 36, which is a good support area, and 45, 48 is where this stock can come up.
Okay, that's the view. I hope that answers your query. The next one is coming in from Shrikant Chavan, wants to know your thoughts on Eicher Motors. He has some holdings and his buy price is at 4,163 rupees or thereabouts. Wants to know whether he should sell or hold, and wants to know a target price as well. But the stock has had a slow grind, in the last 1 month or so, negative returns. But how is it really placed on the charts vis-a-vis the likes of Bajaj Auto, Hero MotoCorp, and particularly for him, what should be the level that he should be watching out for?
Yeah. So after a stellar run in most of the two-wheeler names, I believe it is time for consolidation or some downside, and that should be consistent to the others as well. So yeah, Eicher Motors, I believe if you already have a good profit, look to exit it because there's a top kind of a formation. Probably it will take some time to come up now. in the near term. This stock can probably fall towards 4,500. Take good consolidation for about a month or so at least, and then move up. So exit it now, let it come to 4,500. That is where, once that consolidation takes shape, you buy again, toward the end of the month, but not at current levels. Even a similar view is for Bajaj Auto and Hero MotoCorp, where Bajaj Auto also seems to have topped out, or a top formation is in place, and I believe this stock can probably witness some sort of selling pressure or profit booking, which can take this stock down towards the 11,000 or 10,800 odd level. So yeah, I mean, at this point of time, auto has performed very well. It's time to book some profits, and come to sectors where buying is just starting. Something like a pharma will do very well going forward, while autos might not perform that well.
Right. Just want to quickly squeeze in a couple of more queries before I move on to our fundamental guest. Vipul has a query on Asian paints. Nirav, paints. Is there any clear trend emerging for the paint stocks on the charts? Because we saw, in the middle, sometime a couple of months ago, we saw paint stocks trying to make a comeback. And, of course, fundamentally, there is a lot of competition in the paint space with the entry of the Bidla Group, right? So, for Asian paints in particular, any kind of levels that you'll be watching out for, it is managing to hold on to the 3,000 level. Should that be a stop loss?
Uh, See, paints as a whole, it's quite dependent on the crude, and crude has been very volatile at this point. But just looking at the charts, Asian Paints is in a huge consolidation from the last 3 years, from 2021 October on. I don't see this consolidation being broken so soon. It has to witness some sort of selling pressure before a new uptrend starts. So I'm not really very confident in this stock that if this will go up. I would not be a buyer at current levels. Probably if it falls towards the 2,500 odd levels, that is when I look to buy, not at current levels, or a breakout above 3,500 odd. At this point, I would just say if you bought and you are in a profit, just book some profits and switch to some other counters. Probably something like a metals will do better than at paints at this point of time, or something like an oil PSUs will do much better. So yeah, at this point, don't go for Asian paints.
Okay, that's the view on Asian paints. Couple of last queries really. Somili Ghosh has a query on Northern Arc. The cost price was at 322. I think it's a recent listing. I think September is when it listed. With whatever data you have, can you suggest what kind of strategy she could use, because she is making a loss here at the current juncture?
Uh, See, frankly, technical, we actually look at historical data for technical analysis, and there is really no data where I can do much analysis. So there's no point in commenting, where the stock will go. So sorry, but won't be able to help in this stock.
No worries. I think that's what I want to keep telling our viewers, that recent listings, that's something that our technical analysts will not really be able to help you out, given the fact that they don't have much data or historical data to really work with. But last query for today then, Anune has written in, wants to know your thoughts on Amara Raja. He has some holding at 1,593 rupees per share. He wants to know whether he should book losses or hold on. What would you advise him to do?
Uh, yeah, I don't seem to find this stock actually. Probably, the name has changed or something. Um, don't seem to find this stock on the charts. Just a second. I think the name has changed to ARE. Let me just try and find it. Okay, yeah. So, see this stock, just like Exide, there was a huge upside that was seen, and that was seen from 500 odd levels, went up to 1,700. Whenever such huge upside comes within a year, one and a half years, there is some consolidation that goes on. But having said that, a flag kind of a pattern is being there for the stock. But the breakout is slated at around 1450, 1475 odd levels. Once that breakout comes in, you will see this stock again performing. Until then, this should remain in a consolidation. I probably see this stock in consolidation for another couple of weeks before it breaks out. If you're already holding it, you can continue to hold it. Long term pattern is still positive. Don't see anything to worry about here. You can keep a stop loss of around 1300 for longs. If it goes below 1300, only then it becomes negative. Until then, you can hold on.
All right, that's the view. Hope that answers your query. But I'm afraid with that we're completely timed out on our query segment. And Nirav, I would like to take this opportunity to thank you for joining in this morning. Look forward to connecting again sometime soon, and wish you a very happy trading day.
Thank you.
Well, on that note, we are holding on to opening gains, although just a little bit of a cool off from the opening highs. 25,160 is where we are at the current juncture. The mid cap index also moving in tandem with the benchmarks. But let me quickly bring on board our fundamental guest for today. Then joining me is Kranthi Bathini, who's the equity strategist at WealthMills Securities. Kranthi, great to have you on the show. First of all, what are you making of the earnings that have come out so far? We've had TCS, HCL Tech reporting numbers from the IT pack, where TCS was a disappointment, but HCL Tech has managed to beat expectations. And later on, we have Infosys as well and Wipro as well, wherein a bonus issue will be considered, particularly for Wipro. So, what are you making of the IT earnings before we move on to other sectors? Tell us, is there any scope for a guidance revision by Infosys as well? Because HCL Tech, of course, has done that.
Yeah, Nandita, good morning to you. We don't see any kind of blackbuster kind of results from the IT pack at this point of time. By and large, it's neutral at this point of time. The managements are in a wait and watch approach right now. Of course, the TCS numbers looks subdued. It's mixed kind of numbers at this point of time, and the same kind of pattern can be by and large we are going to witness among all the IT stocks. But the one key observation is the US economy is moving strength to strength at this point of time. The data is quite strong at this point of time. So, but still, the traction is not coming in terms of the earnings. The exuberance is not translating into the numbers at this point of time with respect to the IT stocks are concerned. So that is the reason. If you say the worst is behind, yes, definitely worst is behind for the IT stocks on a medium to longer term perspective. In short term, there can be some kind of hiccups. The US election is in the coming months. So that is the reason the managements are in a wait and watch approach due to the policy making decisions are still going to change or how the things are going to pan out. That's the main reason all the managements are little bit conservative in terms of their guidance are concerned. So right now, the worst is behind for the IT stocks, but still we are cautiously optimistic with respect to the IT as a sector is concerned.
Okay, before I talk about other stocks, what are you making of the market valuations now? We've come off from highs, 3 to 4% kind of a correction. So, would you say that valuations are fair now, or do you see, do you expect some bit of more correction to take place, and perhaps then the valuations will become a little more attractive? What are your thoughts on how the valuations are stacked up at the current juncture?
Nandita, we are supported by strong set of liquidity, and the liquidity both from the domestic, of course, we do witnessed in the last 10, 12 trading sessions, FIs have been exiting India, but the liquidity is quite strong, and the FIs for exiting India, this is a hot money that has been exiting India, but the long only money is still is there in Indian markets, and also there is a euphoria around Indian markets, and a lot of money has been waiting on sidelines to enter into Indian markets. So the valuations are concerned. Okay, in a medium to shorter term perspective, they are looks little bit stretched when you compare with the other markets because when anyone have to compare with the other emerging markets like China and our valuations look stretched. But given the kind of growth story we are having, and the way the Indian economy is positioned at this point of time, we are sweet spot at this point of time. So valuations is not a key concern for the investors, but any kind of healthy correction, any kind of correction that's coming, that has been absorbed by the domestic liquidity. So for medium to longer term perspective, of course, in the next few years, Indian valuations look stretched only because we are on a growth path, and the growth is factored into the valuations at this point of time. So I don't think so. Indian markets are overvalued, but there can be some kind of pockets and sectors or stock specific themes are there where we can see some kind of froth. But by and large, it's going to be a stock specific market. But on a longer term perspective, we are fairly valued at this point of time. Any dip on Indian markets is definitely a warranted buy for the investors.
Right. We have a slew of IPOs that are opening up, and big ticket ones, right? Because today Hyundai Motor India IPO has opened up. It's the largest ever IPO after the LIC's 21,000 crore rupee IPO. Of course, it is entirely an offer for sale, and it could list somewhere around the 22nd of October. But given the fact that you mentioned that we are looking at very strong liquidity in the Indian market, but the slew of IPOs that are hitting the markets, Hyundai today, Swiggy also in the pipeline, you have NTPC Green as well. So a lot of these IPOs are coming up. Do you expect these issues, big ticket issues, to suck out some liquidity from the system? And your thoughts on how one or whether one should really subscribe to the Hyundai IPO or not? Because in terms of valuations, some concerns have been raised by analysts. And if you look at the market share vis-a-vis Maruti, it's of course, Maruti is the leader, but market share also is just about 15% or thereabouts. So, what are your thoughts on where the liquidity is headed from here in light of all these IPOs, and how one should really go about looking at Hyundai Motor India IPO?
Yeah, Nandita. First, with respect to the liquidity is concerned, of course, there are mega IPOs. These are all lined up, but there is a strong emphasis with respect to the liquidity. We have the SIP flows have been quite strong, and the number of new demat accounts have been getting added every month on a regular basis. So the liquidity has been quite strong. Uh, uh, and I don't think so. Okay, there will be any kind of concern with respect to the liquidity, despite of these mega IPOs that are lined up at this point of time. Of course, there can be some impact in the medium term and in the short term, but I don't think so. It's going to have a greater impact on the markets at this point of time. We have strong liquidity. The flows have been quite strong. DIS as well as the retail investors and HNIs and PMS have been sitting on a good amount of cash at this point of time. So I don't think so. Liquidity is a concern for Indian markets in a medium to shorter term perspective. But coming to the Hyundai IPO is concerned, one thing, Nandita, we need to take into cognizance. The company had a strong history. They launched their first product in 1998. They come across 26 years, and they know, they understood the Indian roads better. And during this phase of 26 years, what we have witnessed is many global auto majors entering India and exiting India and trying to re-enter India. That's what the saga what we witnessed in during this phase. But Hyundai Motors, they could able to sustain, and they could able to increase the market share, and emerged as one of the formidable OEM in India. So due to the longer term perspective, and India has a growth phase and disposable incomes are growing up, still cars are considered as a luxury in India. So as they are becoming necessity, these are the OEMs that are going to take greater advantage. So on a longer term perspective, definitely Hyundai Motors is a buy for the investors. If they want to subscribe, they can subscribe, despite of the key valuation concerns, because of the change in the mood in the market in the last few trading sessions. So people are talking about the valuations. Otherwise, for a longer term perspective, Hyundai Motors is better positioned in Indian markets.
Right. I also want to point out major brokerages have also given subscribe rating to this IPO. In fact, the company has already raised 8,300 crore rupees from 225 anchor investors, and the anchor book boasts of names like GIC, New World Fund, Fidelity. On the domestic side as well, ICICI Pru MF, SBI MF, and HDFC MF. But last question, really, Kranthi, if one were to look at rejigging their portfolios, where would you advise investors to book profits, and which are the pockets that they could look at, in terms of, pockets that allow or give you some kind of valuation comfort?
Yeah, Nandita, there are in the recent euphoria and exuberance and in the market, investors would have onboarded many of the companies where the valuations are stretched, where the froth is there, and market is giving a good opportunity for them to exit those kind of names. It is by and large stock specific at this point of time. I don't want to get into sectorial theme also. By and large, there are some definitely the froth is there in some kind of stocks. So market is giving an opportunity for them just to recorrect their portfolio, realign their portfolio, give prior importance to the earnings at this point of time, because stock market always voting machines in short term and weighing machines in long term. So where the earning visibility is quite strong, that's where the investors need to chip in at this point of time. Preferably, risk averse investors can chip into the large cap companies, because there was a fringiness a fortnight back entering into all sort of stocks at this point of time. One need to have that discipline to be in these markets.
Okay, I want to take up this, opportunity to ask you a query that has just come in. I want to get in your thoughts on the overall railway space, because one of our viewers, Savia Mascarenes, has a query on IRFC. If you could help our viewer with how should one really navigate railway stocks at the current juncture, how would you advise them to go about it?
Yeah. Nandita, with respect to the sector is concerned, the stock have been in a momentum zone in the previous quarter, a couple of months back. Right now, they entered into a consolidation phase at this point of time. But with respect to the railway infrastructure is concerned, still there are leg room to go, leg room for these companies to grow further. Especially the railway infrastructure is concerned, they are still they are going to be on a robust note because of the new initiatives, new infrastructure projects, and the new safety measures, and also the new order book that are coming. So we are quite sanguine about the railway stocks on a medium to longer term perspective. Of course, short term, some kind of consolidation is taking place at this point of time. IRFC is concerned, is this the stock, the market capitalization is more than a lakh at this point of time. So on a medium to short term, one can book profit in IRFC because of the valuations are concerned. Remaining infrastructure stocks are concerned in railway infra and railway consultancy business. One can hold on. With respect to the finance, IRFC is concerned, if he is sitting on good amount of profits, he can book, take some profit from the table, or if he want to hold on, okay, he can hold on. But on a medium to shorter term, the valuations look stretched for me at this point of time with respect to railway finance business is concerned.
All right, that's the view on IRFC. Hope that answers your query. But with that, we're completely timed out on this edition of Opening Bell. Kranthi would like to thank you for taking out time and joining in and sharing your thoughts with us. Always appreciate you joining in, and of course, look forward to interacting once again sometime soon.
Thank you, Nandita.
Well, with that, of course, we've come to the end of this edition of Opening Bell. The markets have given up their opening gains, and we are trading in the red as we speak. The Nifty down just about 8 odd points, and the Bank Nifty also slipping into the red. With that, would like to thank all of our viewers for watching the show. Of course, stay tuned to Money Control for all your other news and updates, and come back and join us at 3:30 p.m. on Closing Bell. Have a great trading day.